Is it just the intersection of higher rates, slowing growth, recession fears having an impact here, or are there other factors at play?
I think the initial issue you have pointed out is absolutely correct. Initially, it was inflation, which tends to hurt growth stocks more than the rest of the market. But more recently, you have seen growth issues becoming at the center stage of the markets. Just look at the bond yields. 10-year bond yields have declined from almost 3% to 2.75% because of the growth issues. I think the market now is becoming worried of the effect of higher interest rates and the Fed's hiking rates on growth. And this is what is taking center stage of the markets today.
I wanted to ask you about yields, and it's important that you raise this because we have gone from 2% to almost 3% in just a matter of months. Where to from here? And do you think that perhaps, hey, could be a wild card, but 4% is on the agenda given the dynamic playing out right now?
That looks extreme, I would say, because the difficulty from the Fed's point of view is how do you get control of inflation, but you do not kill growth immediately. If you get outright to 4%, this is a big issue. And most likely, if you get to 4%, then the whole economy is going to be in trouble because, as we know it, housing prices are starting to come down, mortgages are starting to move higher. So it is starting to have an effect on mortgages and on people's houses prices, basically. So if you get all the rates to 4%, the risk is that instead of a soft landing in terms of economic conditions, you then have a hard landing, which of course becomes another issue. So the difficulty from the Fed's point of view is how far do you go to get inflation under control, but not completely dismantling the whole economic growth cycle, which is important, of course, for all of us.
Of course, and more calls now for a 50 basis point hike at the next meeting as well, so investors watching that closely. And while the Fed raises rates, we have the PBOC over in China continuing to pledge monetary policy support. Just talk me through the volatility that we've seen in Chinese stocks over the past few sessions, because this has been quite extraordinary to watch. On the one hand, China pledging to stick with its zero COVID strategy, support markets, and attempt to achieve this 5.5% growth target all at the same time. What does that mean for investors, and is that a realistic prospect right now, Alexander?
Difficulty from the Chinese point of view is how do you manage the COVID zero policy, which seems to remain in place as we speak, and we have just heard that some places in Beijing were being shut down. But then if you want to get to 5.5% growth rate, monetary policy itself will not be enough, because we have seen recently that rates have been brought lower, long-term prime rates have been lowered by banks as well. Banks have made more capital available for companies to borrow, but actually borrowing demand is very weak, which is indicative of people not willing to borrow because they face difficulties in the growth. So the only way you can get to the 5.5%, but still sticking to the zero COVID policy, is through a massive fiscal spending. And this was mentioned today by Xi Jinping. He said, we want to go all out on the fiscal spending. If you want to get to 5.5%, but at the same time having the domestic side of the economy still contracting because of zero COVID policy, the only way out is for the government to spend the money that the private sector is not spending. That still remains to be decided, and we are waiting for more news on that specific side.
And Alexander, we're also watching oil and in particular European natural gas today after Russia's pledge to cut gas supplies to Poland. How do you see this playing out from a pricing and a geopolitical perspective?
Yeah, the question is whether that was just because of retaliation measures, whether we go further from here, because Poland and Bulgaria are the two countries which are going to be first hit by the stop or the cease of the gas supplies to their countries. This is a big issue for those countries. The real question is how far do we get from there? Do we have to expect other retaliation measures for other countries? We will know that in the coming days because more ruble or more expected ruble payments are being expected by the Russian side. The question is whether the other Western countries are going to do it or not. So far, what we have heard is that they didn't want to do that. If that continues to be the case, then we have a stalemate with a potential gas supply cuts to other countries, in which case we should expect gas prices in Europe to go even higher because of the current situation. And of course, economically, this is a big issue because as we know, some countries in Europe, namely Germany and Italy, are very dependent on their gas supplies from Russia.